What is going on, investors? Hopefully, guys are doing well out there. That is right. It is now December. It is now Friday, and it is now time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we have a brand new truck from Tesla. We'll have to talk about that, and we got a lot of other news to talk about, so we better not waste any more of your time. Kick things off like we always do with Meta Platforms. Start of the week at 338, down like a lot of these stocks. Down about 4%, finished the week at 324.82. The United States, UK, among other countries, signing a pact of guidelines to make AI more secure. Now, these are just guidelines. They're non-binding. The different countries can break these rules if they want, but in favor of actual hard legislation, which here in the it depends on where you live, right? But here in the United States, the odds of getting legislation over the finish line to regulate anything, let alone AI, I think is slim to none over the next 12 months until you roll through the next election cycle. And so these guidelines could be kind of a stopgap measure to appease kind of the pro-regulation type folks, but also appease maybe the tech community that doesn't want any shackles of legislation. Now, AI shown slightly negative impact on wages. That is likely to be the case, but not on jobs. And so I think one of the underestimated, and this is according to a study from a European central bank. Now, I think one of the most underestimated aspects of AI is its potential ability to lower our cost of living. So let's imagine you're making $4,000 a month. And at the end of the month, you don't have any money left. Okay, you're living paycheck to paycheck, and by all means, I don't blame you. I've lived, well beyond paycheck to paycheck in my life as well. So I certainly know what that feels like. But if AI has the ability to lower cost out there, certainly wages is part of that. But if your overall costs go down, you don't actually have to make more money. If your standard of living cost were to decline by 50% and you still made $4,000, well, all of a sudden, you got a nice little bit of a raise. And so I think AI's potential to lower costs out there certainly could be felt by most consumers. Now, Meta, Google, to see ad trends improve in November, certainly anecdotally, I'm still running advertisements to a lot of my websites. November was one of the best months that I've ever had, really over the past maybe 2 years or so. It slowed down a little bit after kind of Black Friday. You kind of have that Black Friday kind of push in terms of advertising, but that's what I'm noticing as well. Traffic trends also still remaining there. So I expect decent quarters from both of those companies as we roll into next year. Now, Meta's ad-free subscription service is facing consumer groups in the European Union complaining because they believe Meta breaching a EU consumer law using unfair and deceptive and aggressive practices, including partially blocking consumers from using the services to force them to make a decision quickly. Well, my understanding is Meta has to make them decide pretty quickly. Otherwise, their business model comes under threat. Now, what the consumer groups also noted was that there's a very high subscription fee for, quote, ad-free services, and it's also a deterrent to consumers. Well, I've got news for you. The EU consumer group that is making this complaint, I got news for you. If you look at Facebook's and Meta's and Instagram's average revenue per user, or ARPU, it is astronomically high. You are I'm shocked how much money this company, especially in the developed world, if you put all the users together, it's a relatively small ARPU. But if you just look at the United States and certainly Europe, the ARPU is extremely high. And so in order to take you off of ads, Meta does have to charge quite a bit of money. Otherwise, they might as well just show you ads. Moving on to Apple, start of the week at 189. This stock basically flat, up nearly 1% to 191.24. Now, the company is seeing a rival called Realme ship 200 million phones and potentially go after the premium market here very soon. So I didn't know about Realme. It's a Chinese supplier. It's one of these that looks exactly like the iPhone. I mean, they're basically copying the Apple playbook. There's the Pad 2. Company has multiple products. The phones look absolutely fantastic in my opinion. This is just another one of those Chinese brands that are, taking some market share from Apple in that country, but the country is big enough and Apple makes enough money in other regions. probably but it does keep a lid though on Apple's growth, right? When you have these other makers that can basically just copy your entire business model, at least from a hardware perspective, it is going to keep a lid on your growth in the short term, maybe even the long run. Apple supplier, though, Foxconn, is returning to India with a $1.5 billion project as they continue to ramp up manufacture in that great state, or that great country, excuse me. Now, Apple expected to release a cheaper Vision Pro version. This is perhaps as soon as 2025. I think this makes a lot of sense. I think these are, after tax, you're looking at like $4,000 on the Pro model. But this is what Apple does, right? You have kind of a good, better, best business model. They're coming out with probably like the best premier model, and they'll take some bells and whistles off it and be able to sell it for maybe $1,000 or $2,000. I am still not sure. I mean, we're talking about a $3 trillion company here. We're not talking about, Realme, okay? We're talking about a $3 trillion company. Still not sure. I mean, there was a lot of talk this week about Tesla, how this Cybertruck, which costs like $70,000, how this won't move the needle really over at Tesla from a revenue or a profit perspective. I am thinking the same thing with the Vision Pro. It's a cool product, but I don't know a lot of people that are going to spend $4,000 after tax on a product like that. Now, Apple ending credit card partnership with Goldman Sachs. This is according to the Wall Street Journal. Goldman Sachs obviously has had a lot of trouble making this profitable. I think they're losing like $1 billion a year in their consumer banking business, which largely is filled by Apple. Now, Apple is going to look likely for another partner. They'll look for Capital One. They'll look for Amex. We'll see who ends up picking this up. I wouldn't knee-jerk and run out and buy the bank or whoever ends up picking this up, because it certainly hasn't worked out for Goldman Sachs, and I look at it as potentially maybe just a loss leader for whoever decides to partner with Apple. Now, ARM Holdings, which is now, it's actually done pretty well since its IPO, but this is no surprise that it gets minimal income from Apple despite massive usage. This dates back to when Steve Jobs with Apple, he essentially like established the relationship with ARM Holdings, and it was pretty well known in the tech circles that Apple has like the sweetest heart deal with ARM Holdings. Now, what it does though, it gets competitors to then sign up because they want to, they want to compete like the copycat product. So what do you got to do to copy the product? Well, you got to come knock on the door of ARM Holdings and buy the chip technology. Now, there's always the risk that Apple goes RISC-V, if you will, an open source model. And there are some RISC-V, different types of chips inside of Apple products. So they've already gone down that route. But if they go for the main core processor as RISC-V, that obviously would be detrimental to ARM just from a reputational standpoint, but certainly not from a revenue or profit standpoint. ARM saying that the relationship with Apple goes through 2040, but just understand that it doesn't generate a lot of revenue or profit for them. Now, Apple to be the largest customer of a new semiconductor packaging plant in Arizona. This is actually really exciting because they're going to be making these high-end chips at the TSM factory there in Arizona. But what most people know this, so you manufacture the chip, but then they have to be, quote, packaged. That's a second step. So the computer chips are then sent to another facility to be packaged. And then those packaged chips then have to be sent to likely India or China to be then embedded into the devices like the phones. So even though you're going to have the chip manufacturing and the packaging here in the United States, you are still going to have to embed these in the phones. But this does secure the supply chain just a little bit more. And I think if you give this another 5 to 10 years, I know we're looking out quite a ways here, another 5 to 10 years, and I certainly could see that Apple is almost completely diversified away from China to a certain degree. Raw materials, those types of things, maybe not. Now, Apple said to be discussing bundling its streaming services with Paramount Plus, and this is what you're going to have to see across the entire streaming business because nobody but Netflix makes money. And so you're going to have a consolidation in the industry, and Apple taking the first steps to do that. Now, Apple recorded its best ever smartwatch shipments in Q3. Obviously, Q4 probably going to be relatively well for this company. And most of you might know I'm a Switch watch guy. I don't wear them a whole lot. Man, when I go into the Apple store, they have like the the Ultra watch or whatever the biggest one is. Man, I've tried that thing on, and honestly, I would wear that. I think I'm going to wait for a second model, but like a second generation of that. I would wear that watch probably, honestly. And I didn't think I would ever say that, but it actually looks pretty good on the. I'm not going to give up like a Rolex or an AP, but I would probably wear that on a daily basis. Now, moving on to Amazon, start of the week at 147. This stock basically sideways, down about 0.5%. Finished the week at 147, almost on the dot. Now, iRobot, we talked about last week, iRobot soared based on maybe getting clearance from this acquisition to Amazon from the EU for a $1.4 billion sale, and now we're plunging on a warning. Who insider traded that? You know, like I would look into that. Who in the European Union bought shares of iRobot and then leaked the details that they were going to approve this, watched shares of iRobot soar, and then probably took off their position, and then the real news came out that they might not be approving this deal. I tell you what, if you have the stomach to trade or hold or trade those arbitrage positions, not something I would do personally. Now, Amazon overtakes UPS and FedEx to become the biggest delivery giant in the United States. This was well telegraphed, but it's crazy. Amazon was once almost 100% reliant on UPS, FedEx, and the United States Postal Service to deliver its packages, and now they're delivering a large percentage of their packages, and it's probably only going to continue because I still get occasional Amazon deliveries that come from FedEx and UPS. Now, AWS to show off new AI processors. But what was more interesting is they really expanded the NVIDIA deal, and Jensen Huang was there on stage and really gave bullish commentary about providing NVIDIA's new, like really high-end chips in really like relatively high quantities to Amazon. So Amazon, I'll give Amazon props. They were behind the curve a little bit. It might not have been their fault. Okay, NVIDIA was playing kind of the game, supplying these high-end AI chips to who they wanted to. Some of it was going to like companies like CoreWeave, where they had equity investments in there. They were spending some of the chips to some of the other cloud providers that haven't been investing in their own silicon. But I think with the China sanctions and NVIDIA just continuing to see this market mature, they're realizing that Amazon can be obviously, I think they knew this all along. They knew that they were going to come to Amazon and Amazon was going to write them a big check and order millions of these chips. And that's what it appears to be the case. And so AWS, I think, is going to maintain a pole position in cloud computing, which I think we were sitting here maybe not necessarily a year ago, but certainly 6 to 9 months ago, and we weren't really sure on that. Now, Amazon unveils Q, which is a new generative AI chatbot. This is more or less internal on AWS. It's going to cost you between $20 and $25 per month. You're going to be able to ask Q different, like I tell you what, if you're a developer and you've ever used AWS, there is a learning curve there. I mean, it's so robust and it can do so many different things that, it's a little complicated. And so now you've got a new generative a chatbot on the back end that'll code for you, that'll point you in the right direction, essentially kind of a customer support chatbot for developers over on AWS. Probably a cool product. Now, Amazon, this is a very interesting headline because Amazon contracts with rival SpaceX for its Project Kuiper satellite development. So these satellites is for satellite internet. And so there is like a very, very odd love triangle in this headline because you have SpaceX, which launches its own internet services through Starlink. And now you have Amazon creating a competing product that they're going to use SpaceX to launch. Then also you have Jeff Bezos, who has a rocket company that is trying to compete with SpaceX. Now, obviously, Amazon, from a compliance perspective, has to go with the lowest cost provider. There's also probably a lot of paperwork that would, like SEC paperwork, that would have to be involved if Amazon kind of like ignores SpaceX and goes directly to Jeff Bezos to launch these in the sky. And so in a lot of ways, it makes sense to use SpaceX. And SpaceX, to their credit, is launching a competitor satellite system into the sky. Consumers, obviously, probably went out in that scenario. Now, moving on to Netflix, start of the week at 477, almost 478, down over 2.5%, finished the week at 465.74. Netflix bringing the very popular Grand Theft Auto trilogy games to its subscription service for no extra charge. If you're a subscriber on Netflix, you're going to be able to play the trilogy of Grand Theft Autos, which includes Grand Theft Auto 3, Grand Theft Auto Vice City, and Grand Theft Auto San Andreas right there on your Netflix subscription. Tell you what, I spent hours and hours and hours of my life playing those games. Might be interesting to log in every once in a while. Apparently, they're coming out with a new Grand Theft Auto here relatively soon. Moving on to NVIDIA, start of the week at 481. This one slipped down by about 3%. Just show it to you from a technical perspective. It's not overly concerning. NVIDIA trades lower the rest of this year. It's creating buying opportunities, in my opinion. Finish the week 467.65. NVIDIA likely to remain the dominant AI GPU supplier for years. And I don't think this is in doubt, right? What's in doubt with NVIDIA is you've got a $1.16 trillion market. So how much of this remaining the dominant AI GPU supplier, how much is it already priced into the stock? I think that's all we're asking with NVIDIA. And I think at the just from a very high level, I truly believe you're going to get slightly above market return. So slightly above whatever the S&P 500 does. NVIDIA is likely to return that over the next 5 years. It's, do you get well over above that? I think that's the question that we're asking. And I actually think the upside is probably greater than the downside. So if you get NVIDIA at the right price, probably worth adding to a portfolio. Now, Dell PC miss could spell bad news for Intel and AMD in particular, since they are supplying a lot of those computer chips that are going into those Dell PCs. Dell reported earnings on Thursday. They had weaker than expected results in the PC segment, which we thought was turning the corner. Okay, we got a lot of data and commentary from both Intel and AMD saying that market had troughed, it had bottomed, it started to turn the corner. Even from a financial perspective, you kind of saw that in the financials. And with Dell guiding to a lower than expected forecast for that business, kind of bring some of that in doubt, certainly add pressure on the PC shipment chip makers this week. Moving on to Google, start of the week at 137, down about 4%. Finished the week at 131.86. The company is seeing its ad trends improve. Talked about this with Meta. Certainly anecdotally, I'm seeing this as well. Now, Google comes to an agreement with Canada in their online news fight. This relates to the fact that Canada wanted Google, I think, to pay for showing news links. So they were obviously making, people were going to Google searching for news, and they were clicking on these news, or sometimes there maybe even a summary there, and maybe not clicking over to the news site. Well, Canada wanted Google to pay these providers of this news, and Google did agree to contribute $100 million Canadian to financially support a wide range of news businesses across the country. And it is indexed to inflation. So the more inflation goes up, the more Google will pay. And $100 million to Google to you and I, it's like $100. Now, Google will not be able to replicate its monopoly that it has in its search business. I don't agree with this. I don't agree with this. If you look at and this is why I'm so frustrated with Google, because I've seen their generative AI search product in action. I've seen what type of ads that are going to be available to launch on that product. I can't be more excited about Google search. The problem is I'm not at all confident that they have the leadership teams in place in order to get this done. In fact, I saw a tweet this week from somebody that said, you're not allowed to say an all hands on deck meeting at Google because it's discriminatory to people that don't have hands. And so that's the type of stuff Google is worried about instead of trying to catch up with its competitors. Look, I still think Google is going to get the job done, but I think they're going to have to make some leadership changes at that company. And the minute they do, it is time to buy that stock, likely hand over fist. Now, Google seeks antitrust action on a Microsoft UK cloud market. Google and a lot of people are seeing Microsoft pick up a ton of this cloud market, and they're waving the white flag when you start to request for antitrust action. Now, moving on to Microsoft. Start the week at 377, down about 0.7%. Finished the week at 374.50. Now, Microsoft is getting a non-voting quote, observer board seat. This might be like super premium board seat over at OpenAI. So they're not going to be able to vote, but you're going to have Microsoft looking over your shoulder everything that you do over at OpenAI. Personally, I think this is bullish for Microsoft. It's bullish for the AI industry somewhat, only because you're going to allow OpenAI to continue to push these other companies, including Google and other open source and other independent companies forward. But boy, this keeps both of those companies in a pole position as it relates to AI. Now, Microsoft's president came out and said there's just, quote, no chance of super intelligence, otherwise known as AGI, anytime soon, including maybe as much as decades from now. I don't think this is to be the case. And again, it depends on your definition of AGI. Everybody has their own definition of AGI. But what my idea is, we are still in the exponential improvement phase of AI. A year from now, we're going to look and say, wow, AI has exponentially improved over last year. It's very similar to like the beginning of the iPhone, okay? So you had the first iPhone, and then the next one came out, and you were like, holy crap, I've got to get that one. And then they came out with another one, and you were like, wow, I've got to get that one, okay? And now with the iPhone, like I don't know, you could have like the generation that's 4 or 5, 6 years old, and it's still almost as good as the one that they put out. We're still in that early stage with AI, and do we progress into what some people would call AGI? I don't know, but I think we're still in that exponential phase of improvement. Moving on to Tesla, start of the week at through 233. Unlike most of these stocks, in fact, maybe all of them, this one was actually up 2.27%. Finished the week at 238.83. Now, the company had the industry buzzing as they launched their Cybertruck this week. And I think the company is doing, I'm going to move myself just a little bit, get myself out of the way here. I think the company is doing something wise from just funneling people to buy, because obviously you've got to manufacture these trucks now, right? So they have a good, better, best business model here, where you have a product on the low end, you have a product on the high end. But what you're trying to do in that scenario 100% of the time, you're trying to funnel the vast majority of people to buy the middle product. And obviously that is what's going to happen. If you really want one of these trucks, you're not going to go for the rear-wheel drive one, even though it's only $49,000. Well, the purchase price is $49,000 after your tax credit. Sorry, that includes your tax credit. Before the tax credit, you're paying $60,000 for the truck. Probable savings include some gas savings, but now it appears those EV credits are going to come directly from the manufacturers. You're not going to have to file those on your taxes. You're not going to have to work that out with the IRS. Some people might not even need to get a tax credit because you don't owe any taxes or whatever. Although if you're buying a $70,000 pickup truck that looks like a Lamborghini on steroids, well, you're probably paying some taxes. But they're not going to promise this rear-wheel drive one until 2025. And that's probably being generous. The Cyber Beast one, which is kind of a souped-up model, that one costs darn near $96,000. That's before tax. Obviously, you're going to have just a few buyers of that. You're going to funnel the vast majority of the buyers here in a purchase price of like an $80,000 pickup truck, which does, and you have to talk to your CPA about this, but you can fully, given the weight of this truck, it qualifies like a G-Wagon and like a Hummer does. It qualifies to depreciate the full value of this in the very first year. So there's actually going to be a lot of interest in these trucks because it's one of these cars. There's not a ton of these cars that you can buy where if your business made $100,000, $200,000, $300,000, you're going to be able to fully depreciate that onto your taxes. So instead of shipping that money to the government, you're going to be able to buy a Cybertruck. And so there's going to be a lot of businesses that actually will take that option. They're going to funnel you into this all-wheel drive model, which they say costs about $69,000 after some savings. Some people were definitely disappointed by the fact that the range on the high end was 340 miles. Now, it appears that you can buy like a battery pack that you would put in the bed of the truck that would extend this to almost 500 miles. But I think That is kind of counterintuitive to what people thought. This is 340-mile range estimate. This is not if you're towing. So if you're trying to tow and haul stuff, which I don't think is the main market for this truck. I certainly think people will be doing that, but I don't think these trucks, like a lot of trucks, and I live in a neighborhood where everybody has a freaking truck. I don't see people using them like what they're designed to do. It's just people where I live drive trucks. But I think it is kind of counterintuitive to get that long range, give you a little extra towing power or range when you are towing something. It actually doesn't make a lot of sense to now, plug your cab up, because chances are you need that room. And so again, this is going to be a very niche product. I am on the list for one. With the minute they call me to buy one of these, I am getting one. I will get either one, the Cyber Beast or the all-wheel drive. I'll take either one, honestly. Now, moving over to the technical segment of the show, kick things off with the S&P 500 made a bullish move. You'll see the indexes were positive for the day. We're seeing, I think we're going to see a divergence probably over the next 6 months or so, a divergence between market movement and FAANG, because FAANG, or some people are calling it like the Magnificent Seven. I don't like either term, but we're kind of stuck with FAANG at this point on the channel. You're seeing a divergence between performance of this and the market. I think we're going to see a divergence here. These stocks have outperformed over the last year. In fact, they have been responsible for all the market gains. If the market is going to push higher and retest the highs, it needs to be broad breadth. You're going to need healthcare. You're going to need materials, industrials, real estate. All those different segments are going to have to contribute to push these markets to all-time highs. And if you do the fundamental research on a lot of those, there is a lot. I think there's actually a pretty good case that is potentially possible. We did see the first evidence of that. You had a this is a big green candle. That's a decisive candle. You get those decisive candles over an area of resistance. It just means the sellers weren't there, buyers were there, incremental buyers were there, and they pushed the markets higher. Doesn't mean anything until you get further confirmation, likely next week. Get a rejection here. You're not overly concerned. You get a rejection here, you probably have buying opportunities for the S&P 500. Now, moving over to Meta, really just saw some resistance, but this chart's still in the micro trend. I mean, almost any trend you're looking at with Meta, it looks great, right? But the micro trend, you're making higher lows, higher highs. You just confirmed a higher high. You are pulling back. I'll take out that line. I don't think that means a whole lot. Pullbacks in Meta down to, we'll say $300 per share, probably should be bought. You could have a stop loss, somewhere at maybe 275. You're risking 25 to retest the highs up here at 377. So the risk reward's not amazing, but that appears, in my opinion, that appears where Meta is heading. Retesting highs back up at 375. Moving over to Apple, just kind of flagging out sideways after making a nice impulsive move to the upside. You're kind of retesting these highs up here at 195. A push higher up into probably about $200 per share. Very, very bullish, particularly if it's followed by a push to 200, retest down here back to 180s. Those 180 levels should probably be bought. Moving over to Amazon, it has really since August has kind of retested this 145 level. It has not been able to push higher. You're looking for Amazon. I'm sure Jeff Bezos is looking for this as well, as he's probably got more shares that he wants to sell. He's looking for a push back up into like the 160s, 170s on this one. You get a push back up into 160, 170s. That's a very bullish move for Amazon. Even if you get rejected at these levels, the pullbacks south of, we'll say 130, probably should be bought, honestly. Now, Netflix is forming the technical pattern. It shouldn't surprise, like these stocks are so well followed that this is really, really common. Now, what I do notice that we don't always point out is you have declining volume here. So there hasn't been a lot of interest in this rally that this stock has made since breaking trend. But when you break these breakneck uptrends, you come and do a back test. We'll see this with Google here later, but then they tend to fail here. It's not 100% of the time. You tend to fail here. You're looking, again, if you want to get into Netflix, it's all up to you. If you're looking to get into Netflix, you're looking to buy these pullbacks off of the back test, more than likely. I'll guide you through that from a technical perspective in the future shows, but a fail here is not the worst thing because technically this breakneck uptrend is over, but what could potentially be starting is a new kind of shallower uptrend, and I'd still want to buy the dips on those. So we'll see where this one kind of dips down to. There's probably some opportunity, some like low risk, high reward trades. Certainly if you get down here to like 360, you buy at 360, you set a stop at like 340, and your upside is back to 520. So you've got this huge like $20 downside, $100 upside type trade. That's what we're looking for in the coming weeks and months ahead. Now, NVIDIA has been trading perfectly from a technical perspective, really for a long time, since really the middle of the year. You've been trading between 400 and 500. The sellers step in at 500. That's exactly what they did this week, likely pushing NVIDIA down. You get NVIDIA back down here to 400. You buy at 400. You put your stop at 363, and you probably take some profits when you retrace back to 5. Now, Google obviously looking a little bit like Netflix, didn't do the full back. I guess it depends on where you put this line in. If you put it right there, you broke the breakneck trend, okay? Did a full back test, but what is materializing now is kind of a newer trend, and I'll clean this chart up so you can kind of see the new trend that is materializing with Google. We'll just take all these lines out here. This is kind of the new trend that we're on. This is still higher highs, higher lows. Again, it's not the breakneck skyscraper trend that we're on. You get a pullback in Google down here to 123. You buy it at 123. You put your stop at like 120 for a retest of the trend up here at 140. Man, you're risking $2 to make 20. Those 5-to-1, 10-to-1 trade setups, that's what you're looking for. Again, if you're in these, I'm not in these markets short term. I live in a high tax state. This is not a very profitable thing to do necessarily. But look, if you're looking for that fast money, quick money, these trade setups are coming. Believe me. Now, Microsoft breakneck trend is the only one at highs and above highs. Looking fantastic. You're looking to buy anytime you break to highs and you have a pullback, you're looking to buy that. And now finally, Tesla looking a little bit like the S&P 500. Now we haven't decisively broken up. We certainly haven't decisively broken down. And we said it for many weeks here. That's what you're looking for with Tesla. You're looking for a push above 300. A push above 300 is bullish. A break below, we'll call it like 190, is a little bit bearish, although you're probably looking to buy the dip there. Hopefully, guys, enjoyed today's video. Hopefully, you have a fun and safe weekend. We'll be back again next Friday. Thank you all for tuning in, and good luck with your investments.